All right, good evening, everyone. Welcome to the Monday evening, the 13th of April, Hurley Investments Market View Commentary. This one will probably only be 40 minutes because I'm just going to point a couple things out, and this is the week that we find out how the market judges companies, at least the financials, right? How the market judges companies that do not give their guidance and that do not meet their numbers or really come anywhere close, most likely. So last week we had our best week since 1974. After a couple weeks before that, we had our worst week since 1938. I'm bringing this out because we may have seen some of the gains in the financials come last week. What I mean by that is with interest rates bottoming and Fed loosening its lending restrictions, the financial sector advanced by 19%. Shares of Wells Fargo gained by 27%. Gains of 24% for Bank of America, 26% for Citibank, and JP Morgan was 22%, respectively. There's an 11% gain in technology. So once again, we're coming back to technology and financials will most likely lead us back up to those market highs, in which case those are the areas you might want to be in. With that said, I do have a little part here about Freeport-McMoRan, rallied by almost 30%. What that means is it went from $3.50 up to $5. Not too exciting, but if you have a stock that's at $3.50, rallies up to $5, you then are thinking, I killed it. In all honesty, it's now up to $8.32. So maybe it went from $5 to $6.50 is what I remember. So with that said, I just want to point something out so that you don't think that I'm a know-it-all. Now, it's okay if you want to believe I'm a know-it-all, but in real life, I don't know it all. So let me scroll on down to an interesting article. And it's called, "Do you understand the wild U.S. stock rally? Just forget about 2020. And I may go so far as to say, to try to understand the stock market in general, if you bought education, this has to be about your worst year to try to learn the stock market. Because once again, we're in first time, never seen before in the stock market history, first time evers. Or in other words, there is no past history to reference what's happening right now. I like how it starts out. The stats border on ridiculous. On the eve of the earnings season, nobody has a clue about the S&P 500 notching its best week in 46 years. About 4 trillion have been added back to stock prices after 10 trillion was sheared off. So we've gained back almost half of what we lost. Now, does it make any sense to the stock market veterans, the Wall Street veterans? Of course not. The stimulus is flowing. The curve may be flattening. And I'm going to say maybe because as we look at the coronavirus, I'm going to bring up the U.S. I'm not going to say that we're flattening because it looks like it's going up. If you go logarithmic, it's definitely starting to flatten, but you have to go to the chart that matters. And here's the new cases right here. So what do we hope that this chart is showing us today? If you were to look at this new cases, what is that chart showing you? And the survey says a decrease. I see someone that says a double top, a triple top. So I guess it does look like a point, 2 points. It could be a triple top, but in all honesty, I think today will matter. Sorry about that as I'm trying to get this all together here. Lower lows or a decrease is said there. I looked at and I thought, you know what? To me, it looks like a triple top with an extension here. It would be better if we were down around 25,000 new cases, but unfortunately, as I looked at everything, it looks like 26,000 is where we're going to end up. 27,000 yesterday, so we're definitely decreasing a bit. Deaths, though, seem to keep rising. So it doesn't look pretty, but it does look better. Now, I can't say we've plateaued, right? I don't have it in here to say we've plateaued, but I like the way the charts are looking. In the next 30 days, if we get down to 2,000 or 3,000, maybe we will on May 15th get back into society. Who knows? And that's the point I'm trying to state. You don't know. In fact, it's really interesting, that second paragraph. If almost nobody is going to worry about 2020, said Chris Gaffney, the president of the World Markets TIA, if earnings are so bad it looks like the company won't be able to survive, that matters. But for most companies, investors have to look past 2020 because nobody knows what's going to happen. A stock surge, but I'm not going to read the bull case. While there's no historical parallel for what's going on today, the experienced individual companies that survive sudden blows to their profits may be relevant. It's a deeply inact model prone to survivorship bias, since when faced with existential threats, many companies don't make it. The interesting part is most companies are going to make it because you have a bailout that already rivals everything that was done in 2008. What else was I saying? I disagree with the chart. They say assessing the change, the S&P is still relatively high valuations. I disagree. I think anywhere between 16 and 20 is the normal valuation range. I think 20 or higher is now a high valuation. Some things have to change. Small companies can go on bankrupt with the can't read it, have my stuff on. This five companies will end up with a better competitive position, which I will definitely agree with. The companies that make it through here are going to be better competitively because their competitors will die on the vein. So, is an easy way to say it. I do believe we might have a quick, they're going to call it a recession, but I'm going to tell you we'll probably have a quick 1 quarter what am I trying to say? We'll probably have a 1 quarter negative GDP, but I doubt it's going to be the first quarters. We look at our first quarter through February and March. We still had high consumer credit, consumer spending and income increased. We had durable good orders that surprised us, and we still had retail sales that were profitable. So it might be this next quarter that we dip into a negative GDP, but it should not be a recession. We should not have 2 quarters in a row. And I'm saying that based on this fact. I think people are going to want to get back to work more than the people want to sit at home and collect $4,240 a month. It's $1,060 a week right now here in the state of Utah. I'm going to assume a lot of the other states that are going to have unemployment will be in that same range. I do not think people will want to stay at home for $4,240 when they could be out working in the workforce. And I think it really comes down to how many guys are going to say, get me out of the house. I got to get back to work. I got to get back out to going to the bar after work. Got to get out on the golf course. I think to a certain degree, men are maybe more ignorant to the risks that are involved, whereas I think women will be more of the mama bear, more of the, hey, it's summer, let's spend more time at home, we're already doing it. Let's maybe not hit the movies. I think mama bears will be a little more protective for their kids. And I think that you might not see the retail and or the energy, oil and gas pickup because we're somewhat accustomed to staying around home. To put that into proper perspective, I brought up a chart again. The worldwide deaths, and this one comes from the first of the year to April Fool's, the first. The coronavirus year to date for that 3-month period of time caused 491 deaths. Let's double it. Let's even call it 100,000, knowing China and maybe South Korea or North Korea hid some of them, right? But we've had 122,062 deaths from the seasonal flu, 416 deaths from unclean drinking water, 246,250 deaths from malaria, 269,209 deaths from suicide, 334,886 deaths from traffic accidents, 422,032 deaths from HIV/AIDS related, 1,254,997 deaths from smoking. Cancer, 2,061,853 deaths from cancer. Deaths from starvation, 2,807,806. And deaths from abortion, 10,670,908. I'm not saying it's not serious. But what I am saying is, to a certain degree, I somewhat feel that the world has overreacted. Now, I just had a doctor, and bless her heart. Kevin, the problem is the incredibility, easy transmissibility. Overwhelming healthcare facilities when everyone gets sick all at once. And I'm understanding that. But at the same time, I feel we go through the same thing with the seasonal flu. And I do believe the numbers warrant that even with the high transmission, that I'm a little worried we've overreacted to shutting down the world economy, is all I'm going to say. Abraham, those are numbers. The problem is imagine oneself as part of those numbers. It's a similar perception as a terrorist danger. Agreed. The reality is when you put it on yourself, it's scary. Another comment, I know what you're saying, but it really is not the same, and it's not. This is very highly infective. In fact, when you get it, it stays and lingers with you quite a bit longer. Instead of drowning from fluids within your lungs crystallize and they no longer become able to take the oxygen, and they're permanently damaged, which you could be permanently damaged by the liquids in the lung anyway, the mucuses. But I get it. I get it. I just, to a certain degree, we it's unbelievable that it shuts down the world economy. Now, a couple comments have been made. Could possibly myself and my two older boys have had a lighter, rare form of the coronavirus that we caught in February? Most definitely. And it's ugly. In fact, another comment just came in. I love to get Boris Johnson's take on it now that he was so ill. And obviously, if I get ill, my take is going to be different because it's there and it's right in front of me. I get it. But in the realm or perspectives of everything, does it really warrant let me make sure I've got the right size on all this. Does it really warrant shutting down the world economy? And that's the question. Because I'll be honest with you, I'm going to say no. But we will probably have round 2 in the fall. And 2 years from now, we will probably have another twice as deadly virus that will pass through the world yet again. So, is this the new normal? A while back, I brought in well, here's the question, right? Kevin, how can you say that? How can you figure that? Where are you getting we're going to have another one in 2 years? Where are you pulling these fictitious numbers from, right? That's the short answer that I'm sure you guys are thinking, damn it, Kevin, don't need to scare us, don't need to prove that you're always right, don't need to prove that you're not always right. Where's the one that I want to bring up that brought this to light? It goes back to the one I had a little while back where it was showing how every couple years we ended up having on all these election years, we kept having these ridiculous numbers that keep coming through. That is not it. Give me a quick second. Let me see if I can find it. I had it not too many weeks ago, but it really just makes you think. I'm going to do one more moment here and see if I can find it. I used it a while back. I thought it would be relatively close here. And of course, I don't have it readily at my fingertips. So I guess I'm going to skip it and I'm going to find it from a while back, and I will put it back in here when I find what I'm looking for. Give me one last shot looking through. I know I did it here relatively soon. And I don't know where it's at. So this is back when I said, man, all right, I don't have it, so I'll find it. So it seemed like every 2 years we had a pandemic of some kind. It just depends how the world reacts to it. Now, someone just said not to read a perspective, but he's 100% correct. So I'm going to rephrase it. Opinions don't matter. They just don't, because everyone has an opinion, right? What matters is the reaction to the markets as a whole. So just keep that in mind. Opinions don't matter, but reactions to the markets do. And I just I thought I had it and I forgot about it, so I'm going to possibly do it tomorrow. In fact, tomorrow, by the way, is my son's birthday, so I'm letting this group know that I will not be taking care of the Tuesday night. I might put Keeve on it, but I've given him no warning as of yet. So I'll have to see if I can sucker Keeve into taking over tomorrow night. I don't know if he's available or not, but son has a birthday. So trade findings and adjustments, I might just pre-record something and get that out for you guys. Now, if someone was to ask me, where are the markets going to end this week? You don't know. This is the test week to see how the markets will accept failed earnings, no guidance, and and no future expectations. And I'm going to go through that in a bit. But just looking at that understanding, the markets are going to get no certainty. So here is the question. If we take a look at the S&P, right now we have that 48% V recovery, right? That only happens 48% of the time. If we had a double bottom, if this had extended back down here and we took off, we'd have like an 82% rise. And if we do a W and go back and test these and then head up, we'll then have like a 92% opportunity. If you haven't heard it, and I hate giving the guy credit, but there were some numbers thrown out by Jim Cramer today that basically said the last 9 bear markets that we've gained 50%, we've not yet on any of those gone back and retested the lows. So right now, Jim Cramer's saying we're in the clear because we've made up 50% of the downside. We won't go back and retest. But as I was talking to someone else today, what would make me feel ridiculously more comfortable or better is to see a true double bottoming, where you're at Eli Lilly 147, came down, came up, had our little retest, came up, and then very quickly, 2 days of big swoosh, actually tested a little bit lower, then came up. That is your W pattern. That is the pattern you're looking for in our stock market right now that will get us 3 to 6 months down the road back up to those highs, back up to the 147 like we had a couple months ago. That is the pattern we're looking for. And the swoosh down will be violent and quick, and it'll take out everyone else, all the retail investors, and then we'll move back up to our highs. So if I'm looking at the S&P 500, right now we're in that 50-50 chance. Jim Cramer will say, because we've already gained 50% of our losses, we're 100, 9 out of 9 times it's come back. It would not surprise me if this is the one time it doesn't, right? It always comes back until it doesn't. I would feel a lot more comfortable seeing our V pattern in place, and because of, I don't know, because people hate the banks, because Wells Fargo cheated more people, because JP Morgan is making it significantly higher lending requirements, so they don't have to have a huge massive default on loans. I would actually feel better if the next couple days we had the 2 days of violent washout and we came back down to test that 2100 to 2200 range. Then I would feel comfortable saying it's all clear, and in the next 3 months we'll start to normalize and get ourselves back up. That's what would make me feel better. And the funny thing is, that's what would make me feel better, looking at a stock market that technically we can call bullish again. RSI crossed over, MACD crossed. Again, we're overbought on the Williams %R, but that can happen. If we had the 5 and the 20 in here, the 9 and the 20, we have bullish crossovers. S&P 500. Technically, we went bullish again. Just barely. Could change. And the NASDAQ as well. Technically, we're bullish. So the question is, why does this bullishness not create the sentiment to jump back into the market? And it's that uncertainty, right? It's that uncertainty that if you were to ask me this week where our market's going to end, I don't know. I'd be an idiot. I'd be an idiot to try to outguess the lookover or the punishment that the stock market will put on these individual companies in the next 6 weeks. I'll tell you, again, I would feel extremely better to see the financials get slaughtered this week. And we just made the bottom on our W-shaped pattern, which also, something that's interesting, on your W-shaped pattern, handle's already made, but it does create that cup where then if it extend out, there's your rebound that you're going to see in at the election. So this could give us our cup and handle like Eli Lilly if our stock market or our indexes would complete the same pattern. One more comment to make. Well, Kevin, doesn't it have a 50-50 chance of coming down and still going down lower? Yeah, it does. But that triple bottom, that double bottom, the percentages are higher, like 80 some odd percent that it goes higher. Or in a W, a triple-ish bottom, it's like 90%. So 9 out of 10 times it could go higher. That does mean that could be the one time where we do go lower. But this is where we're going to look, and this is the month that's going to tell us what we're looking at. If you ask me where the S&P end in April, I'm still only saying 5%. You could tell me, but Kevin, we're up like 12% already. Again, if I'm looking for my W pattern, as much as I said a couple weeks ago, kind of looks like the bottom's in. Man, I had to let Apple run from 240 up to 270 till I adjusted my puts. We let Visa run from what did we let it run to? 140 to 170, 145 to 170. We have let some things run. We let Bank of America run from 22 up to 24, well, 25 the other day. So I've let some things run. I'm turning back into protecting. This week, it's the first week of earnings. First week of earnings for the banks. So we're going to get 8% of the earnings for the banks coming in. I'm pretty sure it's after the market closed. I don't know where we are at Carnival Cruise Lines, Johnson Johnson tomorrow, Wells Fargo, United Airlines, JP Morgan. We've got Schwab, Citi, Goldman Sachs, Morgan Stanley, US Bank Corp, United Healthcare, Las Vegas Sands, Bank of America, and Key Corp all in there. Thursday, Abbott, Honeywell, BlackRock, ISRG, Schlumberger on Friday. Really, Wednesday is the day that moves our markets. Let's see where retail sales is. Let's see what the Fed Beige Book talks about. Housing starts and building permits on Thursday. They should be awful. We're expecting it. Monthly options expiration on Friday. If we look internationally, we have China's GDP on, it says on Sunday. I actually thought it was on Friday. Give me a quick second here. I actually thought it was on Friday. Why do I have it on Sunday? I think I made a mistake. I think I don't know how to write things properly this week. Could have been on Sunday. It was on Friday. Yep. Friday. GDP on China is on Friday. So, needless to say, our futures on Friday will be 100% linked to the China GDP. Yes, I hope they lie. I hope they give us some amazing numbers. Interesting article. The stock market has a heck of a bounce. Why it's time for another drop. I do suggest you read this. The worst is not necessarily behind us. In fact, the worst is coming up to us. This is a article from Barron's, and the reality is he makes sense. I mean, let's face it, he makes sense. This will also fit my premise that we're going to have that W, right? The mutual fund industry is in trouble. Investor warns as hidden asset ETFs hit the scene. Another reason why I don't understand why people are in 401ks. I have no idea why people are still investing in mutual funds, but a good idea of how mutual funds work and what alternatives you have, which means these time-dated funds are worthless to you. It's just, if you want to understand funds and fees and everything, please give this a reading to understand how maybe mutual funds someday will just be killed. It also has a disclaimer here where I stuck in CNBC's disclaimer to see just about all the crap you see on TV for them, how none of it they will ever stand behind, just to let you know. Bill Gates says how long it may take before Americans can completely feel safe from the COVID-19. It obviously comes down to the antidote, what am I looking for? The vaccine is the word I'm looking for, which is still probably a year and a half out. Interesting. A lot of people have asked me, well, why aren't more people doing what you're doing? Well, here's a black swan ETF that is only down 1% year to date. Now look at it. It doesn't ever move. You don't ever make anything in it until the black swan event occurs. And then you're supposed to sell out so you can put it back in the S&P so it'll go up. But yes, there are now new products that are mimicking the collar trading, that are mimicking or protecting people from black swan events. It wouldn't surprise me if it's just straight, I want to say just straight treasuries. But yes, that's there is a black swan ETF to protect you. I already went through that one with you guys. And Ford shares fall as automaker warns of first quarterly losses in nearly 16%, which doesn't help. Dive in revenue. But they are well funded to get all the way through the third quarter if needs be without taking any more loans. And obviously, the Fed said it'll now take junk bonds, which are what Ford's ranking is, if it was to do some bonds. So, with that said, questions. Go ahead and ask me the hard questions right now. This is your opportunity to ask me anything and to see if I can do anything to put some of your fears at ease. I've said all year we're probably, yes, I knew Lance would ask it. I'm standing by. We're probably going to see the majority of the gains come for the market to get back to slightly break even or profitability will probably come after November. Now, I did have someone ask me that wasn't Lance that said, hey, I'm screwed. We're going to wait for 6 months with no growth. That is not true. That's getting back to where we were. And because we've added shares, in fact, if I can go ahead and just use the S&P chart one more time to give you guys an idea, you know, right here on like this time period, we added 200 shares of Ford. And right here, we added like 600 shares of Under Armour for people. And right here, we did 200 shares of Disney. And in here, about here, we did Apple shares. We did Baidu dollar cost averaging over here. We did Boeing here, 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 somewhere in here. So we've already done some dollar cost averaging. That as things are coming back, because we've doubled or tripled up on contracts, because we've added 20 to 100% more shares, there is a huge opportunity for you guys to get back to break even. Well, as the market gets back to break even, that you guys get in there with a big return. And that's the ability of what we're doing. What we're doing will give us the idea of, hey, even if things don't come back till November, because we've added shares down here at the lows, By November, you guys could be up 20% or more based on certain positions coming back. I also I appreciate it. I just sent an email with the figures. You can provide your opinion from Deloitte. So something else I can be looking at. Any other questions you guys have? Any other questions I can try to answer for you so that it helps you guys out through this time period? And actually, if I can ask you guys a question, if this is helpful for you guys, do you think other people could appreciate this and use this to help them out? Let me know. Abraham, I haven't seen the email yet because I'm sharing my screen. So it's something I'm going to look at, and that I'll probably not, I'll give an opinion on it tomorrow, most likely, whether it's pre-recorded or I'll have Keeve give a heads up on your email. You know what? It's funny. Someone just said, both of you, depends if the other people are familiar with options. It depends if the other people know their head from the hole in the wall when it comes to trading. So the short answer comes down to, even if they don't, maybe this can give them a perspective on alternative of what is available for them out there. And I've got a list of like 32,000 emails of people that are in education or looking at the stock market. I'm going to really make a push in the next week or two to start to market this out to see if it can help some other people. Not really maybe. Bill, the short answer there is maybe. All right. Hey, guys, I appreciate you being here tonight. If we're not live tomorrow with Keeve, we'll do some kind of recording and we'll make sure it's emailed out to the whole group. Guys, have a wonderful, and guys and gals, Maud, Mary, sorry, I forget about you too, and Ida as well. Have a wonderful evening. I do hope this is helpful for you. And I do hope that you appreciate the sincerity of someone telling you just the way it is. If I had something better to tell you, if I could take a look at what I see, in all honesty, another big drop down, a 2 to 3 day drop down in this week, completing our W and then starting to head back up, I think makes the difference for the next 6 months. It's that important to come back down and test those lows. It'll be the first time in 9 or 19 bear markets that once you gain that 50%, you went back down to test the lows. Let's do it. Let's be ready for it. If not, we'll still make money to the upside, but we're definitely going to be protected pretty close to at the money for earnings, at least through our first round coming up right here when it comes to the financials. Anything financial related, we're moving protection on up. We've had over a 10% run for most of our financials. We're running protection up for the stock ownership. And if we do get that low, and let me put some leaps back in place for Bank of America, which we had a pretty good year last year running those leaps. Guys, have a good evening. I look forward to seeing you Thursday morning, and we'll have Keeve cover for us tomorrow or a pre-recorded version. Good night, everyone, and thanks for being here.